everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time to give you a weekly market update, recapping what happens during the last week, the impact on the market and what could expect for this week. Let me share the screen so we can start on every single point. As usual, I just make a presentation with the most important points you need to follow and with explanation of every single point. Let me remind you one more time, if you are not subscribed to this channel, please click on subscription and also click on the bell to receive notifications with every single update we upload to the channel. I will jump to the full screen. China stimulus and global impact. We're going to analyze exactly the China's stimulus announced last week and what was the impact on the market. I will, by the end of this video, also share with you certain charts showing the Chinese stocks. The Chinese stock exchange, mainly the Shanghai and Hong Kong stock exchange, to see the reaction on the market. But we're obviously going to analyze the impact on the main market, which is the US economy. We also have the US economy indicators, has a GDP growth rate and PCE inflation published last week. I also bring to you those numbers and the impact the numbers cause on the market and the economy. And finally, we're going to analyze what's the situation of European economy in relation with Chinese new program, new stimulus program, and US data from last week. Let's go into details so we can analyze point by point. Regarding China's stimulus and its global impact, we mainly got a few measures, which is like the reduction of reserve requirements ratio by 5 basic points, so 0.5%, which is 50 basic points. And the result of the impact caused by this, it was almost $1 trillion of yuan's fresh into the economy has liquidity. 7 days reverse repo rate has dropped from 1.7% to 1.5%. Again, a new fresh liquidity effect on the internal bank system in China, which is also feeding the stock exchange. Impact in the stock exchange, we got the Hang Seng Index, which is the main index on Hong Kong stock exchange, rising more than 20%, 22%. It's almost 25% at the moment, right? The stimulus as well, bullish sentiment on global markets, US market, SP500, NASDAQ, even European market has been rising after the closing last week of the Chinese markets rising strongly. Impact on other assets. The stimulus has boosted demand for raw materials. I'm going to share with you also the certain minerals, like mainly metals, industrial metal has been rising the last couple of days strongly do this stimulus because they are assuming that the industrial activity is going to reactivate the demand of these minerals. We also have a new top record on gold that they're going to show you in a few minutes, and Bitcoin also has been rising well. US economy indicators, what happens in the US economy, what happens with the GDP growth rate and the PCE inflation published last week. In regards of PCE inflation, we got here that it saw lower inflation than expected, which is good, it's positive, because then it allows the Federal Reserve to continue with the stimulus, cutting the interest rates, which is what the market would like to see. The growth rate in US economy was in line with expectations. Well, also it's true that in line with expectations means strong growth rate, around 3%, which was positive too. So again, we got a PCE inflation with inflation is dropping, and the US economy seems to be still strong because it was around 3%, the Q3 estimation for growth rate from US economy, which again, it's a good surprise. Now, the impact on the market, the Fed potential rate cuts due to the decline in inflation has boosted investors' confidence. If the inflation is not a problem, Federal Reserve probably will continue cutting the interest rates. Actually, the reaction of the dollar was getting weaker, even weaker now after the PCE inflation data, that with the interest rates cut announcement, 50 basis points lower, and still the interest rates, it was after the interest rate cuts, the dollar index, DXY, was quoted almost at the same levels as the previous days. Now with this, with the PCE inflation dropping below the expectations, it's true that the dollar seems to be losing certain support and getting even weaker than the inflation rate cuts announced by the Federal Reserve of 50 basis points. In terms of European economy, we have seen also today certain bad numbers in US economy, in European economy, mainly in German numbers, which is the industrial activities, I have seen just mentioned here. Germany is facing rising unemployment rate and contracting economy, suggesting it may be heading into a recession, because we actually are at risk that the Q3, if in case that is negative, it's going to be 2 consecutive negative periods in the German economy, and therefore an official recession. Let me put the full screen here so you can see all details. The PMI also fell to 29 months low. So still manufacturing PMI index is low, super low in the case of Germany, but it's still low in the case of France. We also have mentioned in our daily reports today about the new French fiscal measures to cut the expenditure of the public expenditure and reduce the deficit, which is by increasing the taxes on big companies with more than 1 billion euros on incomes, and also on certain financial transactions, just to reduce the deficit and adjust the market. Well, I think it's time now to analyze what was exactly the impact on the stocks. Let's take a look on the charts to see that regardless of this situation in the European economy, which is not the best and is actually the worst in the last few years, we can see the charts indicating the opposite. The charts in the case of DAX 40, the main German index, it was broken new top records later this week. And now it's time to take a look on the charts. And I want to start show you the Chinese markets to show exactly what was the impact caused by the announcements of the government of China. So let's take a look on Hang Seng, which is the index we got in the screen right now. I just highlight two mainly bullish movements caused over this year. You got the one caused early this year by the end of April, between April and May. It was right here. It was the first measures announced by the People's Bank of China, which it was the stimulus, also reduction of the coefficient for reserve, and also certain flexibility on real estate markets. So far, it seems to be really similar movement, the one caused by today. It's tiny little bit bigger than the previous one, because it caused more than 25% rise on the market, while the previous one done in May, it was causing more than 20% rise. So very similar, very symmetric movements. This is the Hang Seng Index. We take a look also on Shanghai. It's massive. The impact is so good, so strong on the Shanghai Composite Index. As you can see, very similar movements in both of them. The one caused in May by announcements of China on stimulus, and the ones caused now, which is giving many gaps, and it seems to be really vertical movement, could cause obviously a contraction in the coming days. Based on the technical analysis, we could hopefully see the index resisting 3,000 points or 3,100 points, which will be the perfect best support in case of a contraction on the price. Now, the effect on the US market, which is the second thing I want to highlight on this video, it has been very clear. We have seen also the SP500 future trying to break out the 5,800 points. Even the previous one, it was 5,700 points. In both cases, it was broken up those levels, but now by Monday, it has been losing 5,800 points. So far, it's quoting around that area. So I believe we will see a lateral movements here until the non-farm payrolls this week. By the end of this week, unemployment rate to basically to confirm if the Federal Reserve decision is the right one or not. In the case of NASDAQ 100, we have seen how has been broken finally the 20,000 points, rising also to 20,350 points last week and dropping back to 20,000 points as a kind of clear support for this market. And I want to also just mention dollar, euro dollar, and gold. In the case of the dollar, it's interesting to see that the cut of the interest rates announced of 50 basis points didn't cause major impact. The dollar index was still resisting 150 points as support, but now, as you can see, is losing 150 points support, and we are quoting 126 points right now. So therefore, the dollar seems to getting weaker, probably because the PCE inflation published on Friday, it was lower than expected. Now the euro dollar has been rising again to 1.12 in the exchange rate, which is almost this area, the one we perceive as a resistance for the long term. But you can see that is touching the 1.12 as a level of resistant, and at some point I believe they're gonna probably break up this level if the dollar is not reacting, or even if the non-farm payrolls, unemployment rate looks weak this week, right? If we see bad results in terms of labor market report. Now, going to the gold, we have seen last week how the gold was reaching and also breaking up. New top record, $2,700 per ounce, and at the moment it's just dropping back to $2,660 something per ounce. But again, 2,650 seems to be a support, 2,700 a new top record, and still the market is extremely bullish, and therefore we should not be expecting any important correction in gold, especially with the dollar in the current situation of getting weaker after these Federal Reserve decisions and after the macroeconomic data published from United States. Again, important attention to the labor market report on Friday, non-farm payrolls and unemployment rate, because it could affect the dollar value and therefore indirectly could also influence on the value of gold. See you in the next reports and take care. Bye-bye.